Assalamualaikum. So today, I am Akila Fakiha and my teammates Anis Nadira, Siti Nur Amira, Nur Fariza and Ain Shahira will present about Petronas Dagangan Berhad. Firstly, we look to introduction. Petronas Dagangan Berhad is the principal marketing arm of Petronas and incorporated in Malaysia under the Companies Act 1965 on 5 August 1982. PDB can be act as the overall market leader for petroleum products in industrial and commercial sectors in Malaysia. Their four core businesses are retail, commercial, LPG, and lubricant. The vision of the company is to become the brand of first choice among the customers, and the mission is to value-driven fuel marketing with market leadership in Malaysia. Next, we move to the industry analysis. In the term of choice of substitute products, sometimes customers tend to change their taste to other similar products such as biofuels, nuclear energy, and coal. Then, in bargaining power of buyers, customers will always choose a product based on affordable price and the quality of the product. Next, rivalry among existing competitors. To compete with existing competitors, PGB can do more promotions and give benefits to customers. Moreover, the bargaining power of suppliers. By using suppliers from international oil companies such as Chevron, Shell, and ExxonMobil, PDB can expand their business worldwide. Last but not least is threat of new entrants. The cost instability of oil and gas, also high cost of capital required, should be avoided by PDB to maintain high quality production. Next, we look to the SWOT analysis of PDB. Firstly, their strengths are consistent of the strong performance and diverse range of portfolio in Malaysia. Then, in the term of weaknesses, there are excessive concentration on oil and gas only, and there are several ethical issues in taking advantage of the workers. After that, the opportunities they can gain are alternative options to expand in other businesses and create a partnership with racing business to be more well-known their brand name. And lastly, the threats are mostly the competition among existing competitors and recently the falling world of oil prices since pandemic happened. Next, Ain Shahira will present about year-to-year analysis of PDB company.
Next is financial analysis. First of all is year-to-year analysis. It is important as it can help a company to measure their business performance. As for Petronas, we decided to choose year between 2016 and 2017 because it shows that it was the best performance. As we can see from the graph, the gross profit is increasing by 13.68%. Thus, it means that it was the good as the company has more to cover for the operating, financing, and other costs. Moreover, the profit before taxation is higher. It means that Petronas is good in managing its operating expenses. Thus, it also has led in higher income compared to the other years. Next, I will pass to Anis Nadira as she will explain about the index analysis.
For index number and trend analysis, the net revenues increased over the 5 years period from 2015 to 2019 by 22.54%. Meanwhile, the cost of revenue had a corresponding increase of 18.99%. The increase in net revenues and cost of revenue can be related with the increase in gross profit of 67.35%. The gaining in other unit causes an increase in the net income for 2019, which is 7.15%. This is important as we continue our analysis of Petronas Dagangan Berhad. Net income in 2017 appeared to be the highest among other years, which is 63.3% as we cover various measures of performance. The strong performance was driven by the group's ongoing transformation efforts, which focus on cost optimization and efficiency improvement. It is also supported by increased commodity prices and improved margins. Next, we will move on to Nur Fariza, who will explain the common size.
Common size statements display all line items as percentages of a common baseline item figure. The standard figure used in the analysis of a common size income statement is its total sales revenue. As we can see, cost of revenue has gone down from 92.46% in 2015 to 89.71% in 2019. This is great news. The company has managed to shave off the variable cost little by little over the last 5 years. So we know that the gross profit increased because the company focused on cutting down the variable cost, maybe in terms of the cost of revenue. Since selling, distribution, and administration is a relatively fixed cost, the company would benefit with a higher profit as the business scales. With the impact with the impact of other income, we can see that the operating profit margin is lower in the most recent years. As you can see, selling, distribution, and administration expenses, other income, and financing costs make it hard to judge net income on its own. So, the overall Petronas Dagangan Berhad strategy seems to us is to continue its focus on the global brand presence. They're keeping margin as stable as possible without any big changes. They're conservative in their expansion and slowly exploring new adjacent markets that they can roll into their existing vertical chain as long as they can synergize. Next, we move to the ratio analysis. As we know, ratio are used by both internal and external analysis. So, for the first type is liquidity ratio. Liquidity refers to the speed with which an asset can be converted to cash. First is the current ratio. The company's current ratio shows a high ratio from 1.26 times in 2015 to 1.54 times in 2019, which may indicate that too many of its assets are related to productive activity, although it shows a slight decline in 2018 and 2019. Secondly is quick ratio. The company's quick ratio indicates a high ratio from 1.04 times in 2015 to 1.31 times in 2019, which means that the company's short-term debt can be created by selling all of the company's liquid assets in a very short time, despite the drop in ratio in 2018 and 2019. The last liquidity ratio is net working capital. The company's positive net working capital from 2015 to 2019 indicates that the company can repay its short-term liabilities and invest in other activities. What can I conclude is Petronas Dagangan Berhad is able to meet its current obligation. Next, we move to Anis.
Next, as for efficiency ratio, there are 5 components involved. The first one is inventory turnover ratio. It shows a high ratio where it increases from 2017 to 2019, which indicates that the company is faster in selling their products. The higher the ratio, the stronger the sales. Next, we move to account receivable turnover ratio. As we can see here, even though it increases over the year, it still shows a lower ratio, which may indicate that the company should possibly revise their credit policies and find reason why their customers cannot pay on time. Moreover, average collection period. It shows a lower ratio from 2015 to 2019, which means that the company has a tight credit policy and effective management. Furthermore, fixed asset turnover ratio. As we can see here, it shows a higher ratio, which indicates that the company is efficient at managing its fixed asset. Last but not least, total asset turnover ratio. It shows a higher ratio, which indicates that the company is efficiently use their assets to generate sales. Next is Akila Fakiha, who will explain about leverage ratio.
Next, we look at the leverage ratio of PDB. Firstly is debt ratio. Based on the bar chart, it shows that there was a high increasing ratio in 2016, which is 42.21% compared to 2015. This indicates PDB take a risk in use of debt to finance its investment during that year. Then it is decreasing back in 2017, amounted 31.28%, which means they are reduced in using debt. However, it increased back in 2018 and latest in 2019 amounted to 39.58%. After that, we look into their debt to equity ratio. Based on the bar chart, it also showed a high increase in 2016 amounted 73.5% compared to 2015 amounted 55.40%. It means that the capital by the creditors is more than the capital by the shareholders and put PDP in high risk. Unfortunately, it decreased back in 2017 and 2018. Nevertheless, it increased back in 2019. Then lastly is the time interest earned. Based on the bar chart, it shows higher ratio in 2015 and 2016 amounted 5 at 5.86 times, which means that PDB has able to bear interest payments at due. Meanwhile, in 2017 and 2018, PDB show low ratio amounted 61.68 times, which means there might be interest in debt. Unfortunately, it increased back in 2018 and it shows stable condition. Next, we move to Ain Shahira.
Next is profitability ratio. Firstly is gross profit margin. It shows that in 2019, it was the higher ratio compared to the other years by 10.29%. It means that Petronas is effectively managing and generating revenue by considering the costs that involve in producing their product and services. Next is net profit margin. The graph tells us that the ratio is getting increased after the year of 2017. Thus, this indicates that Petronas start to be efficiently in converting their sales into actual profit. Apart from that, the other element is operating profit margin. The ratio of operating profit margin are getting decreased in year 2018 and 2019 from 5.97% to 3.7%. This reveals that Petronas is not making enough money for its ongoing operations to pay for its fixed asset as well as the variable costs. Next is return on assets. Since the return on asset is getting lower, it has proved that Petronas are not able to generate the company's total assets into a profit. As for that, Petronas should try to reduce the inventory as excessive in inventory can raise the assets cost without producing more income. And last but not least, it is return on equity. Return on equity is getting decreased in year of 2018 and 2019. Therefore, it indicates that Petronas are not efficient in utilizing its equity base and give a lower return to its investor. In order to increase the ROE, Petronas should replace the financing debt into equity. Next is Siti Amira.
Alright, so I proceed to the market valuation. In market valuation, we have earning per share, price earning ratio, book value per share, and dividend yield. So first, earning per share. As we could see, from 2015 to 2017, the value increased but decreased in 2018 and slightly improving in 2019. When the value is high, it indicates a higher profitability. But when the value is lower, it shows that the profit allocated to the outstanding share of common stock is decreasing. And next, price earning ratio. From 2015 to 2016, the PE ratio declined, but increasing from 2016 to 2018. When the PE ratio is high, it indicates that the investor is willing to pay more for each unit of income. However, from 2018 to 2019, PE ratio starts to decline, which proves that investors pay less compared to last year, and this value could avoid from the stock to be overvalued. And next, book value per share. From 2015 to 2017, the value of book value per share fluctuates, and starting from 2018 to 2019, the value slightly increased. This proves that in 2019, the share in PDB is more worthy as the higher value of book value per share, the higher the liquidity of the asset that will be converted to common equity in the event of liquidation. And lastly, dividend yield. From 2015 to 2017, the amount of dividend yield increased but declined from 2017 to 2019. This shows that from 2017 to 2019, PDB paid less dividend to the shareholders due to the economic condition during that period, and Petronas is focusing more on improving their product to generate higher profitability in the future. Lastly, before we end, let's look at the conclusion and recommendations. As for the conclusion, it is worthy to invest in Petronas Dagangan Berhad as they have consistent return. And this could be proved by looking at the return on equity. And next, PDB also have a good inventory management. This could be proved through the high value of inventory turnover. And next, as for the recommendations, PDB could invest in technology to gain a better ability management, reduce working time, and achieve higher profitability. Next, PDB also could invest in research and development to reduce their debt, getting lower cost of raw material. And as for that, that is all from us. Thank you.